Hi everybody, good morning. Thank you for joining us today. This is an ESG panel, and I've heard this is a very first panel for this forum. And today we have the distinguished panelists. So my name is Kenji Fuma, CEO of Neuralink. We provide ESG advisory services for the investors and the corporations. So today, from now, we're going to talk about how did ESG investing take over the mainstream position and where it is going. So the first panelist is Matsui, Vice Chair of Goldman Sachs Japan. The next, Keiko Tashiro, Deputy President, Daiwa Securities Group, Inc. Yumiko Murakami, Head of OECD, Tokyo Center. Hi guys. So to begin with, now we have the great panelists. So first, we ask them their perceptions about ESG investing. So Matsui-san, please talk.
Sure. Thanks so much for inviting us to participate in this amazing FinTech conference, and we're very pleased to kick off the conference with this panel on a very important topic, ESG. So I thought I'd start with first off kind of describing some of the global trends that we're observing in the ESG environment. And what I'd like to do is start with the evolution, second, talk about growth and what's driven it, and then third, some of the challenges that lie ahead. So first off, in terms of the evolution, as many of you probably know, ESG investment didn't start being called ESG. It was really kind of called things like socially responsible investing, SRI investing, back in the 1960s, where the focus was actually more on negative screening or exclusionary screening, meaning don't include or exclude from your portfolios so-called sin stocks like tobacco or guns. Then the industry evolved towards more positive tilts to companies with desired ESG characteristics, such as gender diversity or low carbon emissions. And now, of course, large, sophisticated institutional investors around the world, including, for instance, Japan's GPIF, the world's largest public pension scheme, and others want to understand how to integrate ESG across their entire investment portfolios, because they've realized that sustainable investment is being aware both of financial risks as well as non-financial risks. ESG investing has been fueled by the growing focus on the UN's SDGs, which were launched, of course, in 2015. And ESG can kind of be described as a way of transposing the UN's Sustainable Development Goals onto an investment context. Secondly, very quickly on growth, ESG and sustainable investment assets, as many of you know, have absolutely exploded in recent years. For instance, the number of PRI, United Nations Principles of Responsible Investing signatories, has exploded to over 3,000 signatories in just the past 6 years, with combined AUM growing from $45 trillion to over $100 trillion this year. Regionally, the movement, of course, on ESG investment was launched kind of in Europe and then made its way to the United States, and more recently, of course, has reached the shores of Japan. But if you look at the penetration of ESG in, for example, region-dedicated assets, Europe has the highest penetration, about 7% of European dedicated AUM, 2% of US funds, and only 1% here in Japan. So hence, tremendous scope for growth going forward. And then third is kind of related to this is what's driven this explosion in ESG. Number one, clearly growing empirical evidence that ESG issues linked to ESG issues related to material investment risks is really driving investment performance and outcomes. Number two is rising investor demand. Three is a deeper regulatory focus. And fourth is ultimately, ESG is ultimately a fund manager's job of fiduciary responsibility. And so ESG is not just a compliance issue anymore, it's really become a value driver in the investment process. Finally, in terms of the challenges, I think we're going to talk about this more later, but the number one challenge that we face with doing ESG research at Goldman Sachs is data, inadequate, high quality, and consistent data availability. One CFO of a corporate client actually mentioned to us recently at a conference, he was asked by an investor for 2,000 pieces of ESG data, and I think we've gone a little bit overboard. Risks of greenwashing is also rising, so we need to stress the focus of materiality over simply disclosure and performance over simple policy. In other words, we need better quality data on the things that actually matter the most. Good news, though, is there is, I think, driven by investor initiatives, some very promising efforts such as SASB, the Sustainability Accounting Standards Board, and the TCFD, the Task on Climate and Financial Disclosures, both being launched in the last few years, are really critical first steps in terms of creating a common set of metrics and reporting standards. Thank you.
Thank you. Next, I want to ask to Tashiro-san about also the perception, including the Japanese characteristics.
So good morning. It's great to be here with two women that I respect so much, and I hope that we can share our enthusiasm for this topic because it's so important. My role is to explain ESG investments in Japan, which I will do, but I'd like to approach it from two ways. One is the investor side, and the other is the receiving end, which is the Japanese corporate side. So I'll first give you some figures, which you already see, and then I'll talk about why we are at this point in Japan, and then I'd like to talk about where I think Japan is going. So if you look at this slide, which is a slide by Global Sustainable Investment Alliance, the data was provided, and it's only up to 2018. So this shows the proportion of ESG investing relative to total managed assets between 2014 and 2018. If you see the 2018 part, you can see that Japan is just short of 20%. United States between 25 and 30%, and Europe is around 50%. And this trend, I think, is continuing. Maybe it's inched up a bit. So right now, we cannot say that ESG investment in Japan is mainstream. Not yet. So looking at the corporate side, this shows issuance of SDG bonds in Japan. And I say SDG bonds because this is how the Japan Securities Dealers Association categorizes ESG bonds. So you can see that issuances increased quite significantly. Between 2018 and 19, it's more than doubled. And in 2020, as of September, there's a 17% increase from the whole of 2019. So you can see that issuance in Japan, and it's the same globally, has increased quite significantly. One characteristic is that because of COVID, sustainable bonds, which is the blue you can see, has increased more than double in 2020. And this figure, after this graph, has increased more. So we are heading towards the right direction. I should say that the overall actual figures, although the growth rate is very high, is still, compared to Europe and the States, is still quite low. There's another slide. Kathy mentioned TCFD. The number of signatories, or the number of companies that have signed up for TCFD, is the highest in Japan. 314 as the end of October. That's the most number of countries from any other country. So that is also something that I think is promising going forwards. I should add that up to 2018, because the number of issuers in Japan was so limited and there was much more demand by investors in Japan, most of the bonds issued were from non-Japanese companies. So hopefully we will see more Japanese companies issue. So that was my last slide. So I would like to give you some reasons why this is the situation now. And I think I'd like to talk about three relationships. One is the relationship between companies and their consumers. One is between companies and shareholders. And the last is between asset managers and asset holders. So Japanese consumers tend not to be activists. They're very peculiar about quality. They would not buy a product if there's some quality issues. But it might have something to do with the media, but they fairly boycott a company. So the conscience of Japanese companies to their consumers is a bit different from Western companies. Number two, shareholders and companies. We know that up to 2014, until the 2015, until Corporate Governance Code was issued, or in 2014 when the Stewardship Code was issued, Japanese shareholders tend to be quite passive. That's changed, but that's also why ESG might not have gone mainstream in Japan. And finally, the relationship between asset managers and asset holders. In Europe, asset managers like pension funds were headed the ESG movement because a lot of the asset holders, meaning the pension money, they wanted to know where their money was being invested. In Japan, people are not vocal about how their money is invested. And that is another reason why I think until 2015, when GPIF signed PRI, became a signatory, pensions have not been that active in the ESG world. So that is the situation in Japan. And I think going forwards, number one, because corporate governance is a hot topic, and it's evolving. We're seeing the corporate governance code being renewed every few years, and that's promising. And also because of Mr. Suga, who's the new prime minister, announced that, that he will commit that Japan will be carbon neutral by 2050. A lot of the companies in Japan will be aligned, and they will be much more environmental conscious. So I think ESG in Japan, both from the investor side and from the corporate side, has a lot of room to expand. Thank you.
Thank you very much. Then I want to ask the Murakami-san about, I understand the OECD also supports this invested trending for a long time. So what is your view from the international organizations such as OECD?
Sure. Thank you so much for this opportunity. Today, I think I'm going to share some of the really interesting discussions that are taking place at OECD around ESG. In fact, as you said, ESG is a very, very hot topic. There are a number of committees, there are a number of study groups that have been formed to look into a whole bunch of different issues related to the ESG theme. So I will talk about three things mainly. What is driving this whole momentum, this very, very strong momentum in terms of ESG and what ESG can do to the society and economy? And secondly, I will touch upon different tools that are available and challenges and limitations as well as opportunities with regard to these ESG tools. And lastly, I will discuss the policy element in terms of what kind of policy discussions are taking place around the ESG theme. So first of all, what is driving this huge momentum? Not only in the world in general, but as Tashiro-san said, it's now starting to become a really hot theme in Japan as well. First of all, if you look at the capital markets, you can just see the amount of ESG related investments, the money that's coming into the capital markets. You can see there's a lot of interest from the investor perspective. So that's definitely one of the biggest drivers. Investors are looking at the non-financial, typical financial information. That's been always part of the decision-making process, but they are starting to look at the non-financial information very, very closely. That's now being incorporated into the decision-making process by the investment community. That's definitely one of the biggest drivers here. But I think equally important element is the fact that in general, there is a higher level of awareness among Mrs. Watanabe, among people who are consuming the products that are produced by companies that may be aware of these elements relating to ESG, or maybe not aware of ESG elements. And I do think that this is actually going to be potentially even more powerful in terms of how this momentum is going to pick up strength compared to the investment community. Investment community has been one of the first drivers, but I do think the social expectations, I think, is going to be very, very strong, and quite frankly, like I said, it could be potentially even more important than investment community going forward. Now we are in this COVID era, and this is really interesting. Of course, COVID, challenge has been very difficult for everybody. But actually, it does have a very important role here in this discussion, because I do think the COVID challenge has brought up a number of ESG considerations into many of the policy discussions that are taking place, among different government officials, different actors in the capital markets, things that people didn't think about before the COVID time. And I do think if you want to look at on the brighter side of the COVID challenge, I do think this is actually going to be another driver to promote the important discussions around the ESG theme. And fiduciary responsibility, which I think is also evolving, they're having a number of interesting announcements. NASDAQ basically said, last week they are going to require diversity on the NASDAQ companies' boards. Similar announcement has been made in the Japanese context as well over the weekend. I think all these are related to the ESG discussion here. The fiduciary responsibilities imposed on the part of the board members. They are going to be looking at the ESG elements even more closely so that they can carry out the responsibilities that they are expected to carry out if they are to maximize not only the financial returns for the companies that they are responsible for, but also the social and community responsibilities that come together with the company's financial responsibility. So I do think that's another interesting driver that's been picking up a lot of momentum. But I do think, just looking at the last couple of weeks, a couple announcements that have come out, it just makes me think that is going to even, that's going to be even more interesting going forward. And the financial institutions that have been always very important element in terms of the ESG discussions, I do think there are going to be even more pressure and responsibilities, scrutiny placed on financial institutions, banks, when it comes to lending, when it comes to investment. That's another element in terms of what's been driving the ESG discussion. So let's look at some of the tools and potentially, I'm looking at this chart and getting dizzy, I'm sure. There are a number of data points that have been used, that are being used to understand the ESG elements of companies. The problem here is, as you can see in this graph, it's extremely difficult to understand the data points that are available or not available because there is very little consistency. And you can just, you look at this data and think, what does this mean? I'm puzzled. There are similar data I want to show here. This is the ratings. The variation, huge variation between ESG ratings. And again, you can see here the consistency that we would like to see among different agencies. Still a big challenge here. Similar, basically, data points here. Does the ESG play a very important role in terms of basically aligning in the interest of investors, basically looking at the financial performance of these companies, and basically what these companies are doing, or how well or how poorly they're doing on the, for example, in this case, carbon emission side. You can still see there are a lot of gaps we would like to see ideally very strong correlation between the ESG data points and the performance of financial performance that can also give a confidence to investors who are trying to make right decisions in terms of which companies are going to do well based on the ESG elements that should have a positive correlation with their financial performance. The problem here is, you can see, the correlation is still very difficult to identify based on what we have today. So what do we need to do? A lot of interesting initiatives are taking place. Some of the things that have been mentioned by Kathy and Tashiro-san, very encouraging in terms of where we're heading. So I would like to focus on the 4 areas in terms of what we are seeing from the discussions that are taking place at OECD. First of all, we do think the data reporting framework is definitely going to be the key. As I said earlier, the consistency is something that we need to work on. There are a number of encouraging initiatives here, but in terms of having a very easy to understand, consistent, and also global data points that we need to have, we have a lot of work that needs to be done in this area. It has to be global, and it has to be mandated. It's easy to audit, easy to understand, easy for companies to report, and easy for investors to understand. That is something that we all have to work together on. The second point is the regulatory environment. We need to have a better or stronger regulatory environment, and a lot of this has to do with government's policies. But in terms of the financial regulations, we need to have a better coordination between the government regulatory agencies and capital market participants. Again, this is an area where we are seeing a lot of improvement in many countries, but we do think this is something that needs to be done more urgently as well. The third area is the fact that the government role here needs to be strengthened. This is actually, for example, if you look at the a number of infrastructure investments, especially in developing countries, we have noticed that the role of government has not been as strong as it should have been. So, for example, if you look at the long-term impact on the macroeconomy in many of Asian countries that have taken on a very large, capital-heavy investments, which have been a lot of times backed up by governments, we started to see a number of long-term risks, downsides, especially with regard to the environmental risks. And we think that this is one area among many where government role should have been much bigger. And that's something that we are discussing with a number of member states right now at OECD in terms of what government should be doing in the ESG context. Last one that I will touch upon is the, there are actually a number of standards or global standards that have been around for some time. I would mention the corporate governance code that Tashiro-san mentioned. We actually at OECD have been actually sharing with a number of countries around the world what we have established as the global corporate governance code. So it's been the model of Japan's corporate governance code, for example, when the Tokyo Stock Exchange and FSA decided to make one for Japan several years ago. And that can be actually the case for many other countries as well if they are in the process of coming up with one or strengthening the ones that they have. So another one that I would mention is the is the Responsible Business Conduct Code that the OECD has established and developed. It's something that we are sharing again with a number of member states and non-member states. That can be a very good standard for companies, in particular private sector companies, in terms of coming up with their own guidelines and standards. So these are the things that have been around. We actually have been very open about sharing what we have developed at OECD. So hopefully those existing guidelines and instruments can be actually used by many other actors. So that's about it, and I would like to turn this back to Fuma-san, please. Thank you.
Thank you very much. So next, I want to make some in-depth discussion about the status quo and also the history of ESG investing. So first, Kathy-san. So why has ESG investing become mainstream recently? And also the COVID-19, what kind of impact the COVID-19 influence in investing trends, and why the Goldman Sachs conducting the 30-year, the long time, the ESG research?
Sure. So I think that ESG, from my perspective, is no longer, again, just relegated to a compliance or a government regulatory issue. Maybe, we older adults aren't so much accustomed to voting with our feet, but I can assure you that the younger generation, be it the millennials or Gen Z generation, is definitely voting with their feet. Just to give you a small anecdote, my daughter is 20 years old. She used to buy clothing from one particular brand. It was her absolute favorite brand, and then one day there was a tweet or something about the CEO of this brand making some kind of racially inappropriate comment. That was the end of that brand. She stopped buying, her friends stopped buying. And I think in this world of social media, where that's such a microscope on corporates and management behavior, that it's really quite risky if you just think, oh, nobody's going to hear this, or if I put this in an email, it will never be read. But that has really become a huge risk. And I think that COVID especially has brought to the fore the sense of how important corporate resilience is in the state of an emergency or a pandemic. How are companies, for instance, treating their employees? Some companies just took an axe and laid off their staff. Others were more kind. They kept their people on the payroll, perhaps paid them less or shortened their hours, but did everything possible to keep them on the payroll. That ties directly to the factors that ESG measures, like employee satisfaction, for instance, which has been very powerful. How do you manage your supply chains? Do you have crisis management, systems in place to manage a crisis like this when a pandemic breaks out on your supply chain? So all of these things, I think, are things that now not just investors, but actually just people on the street are reading about and looking at and focused on, which I think makes it more mainstream than just isolated in terms of, oh, it's just an investment issue and nothing more than that. Sustainable investing, as all of us know, used to be relegated in the category of low returns, and it's a performance trade-off. It's mutually exclusive, but as many of you know, that has simply been not the case under COVID. For instance, our head of Goldman's Sustainable Finance Group, John Goldstein, quoted these statistics. ESG investing has actually passed its stress test under COVID. What he means by that, in Q1, 70% of ESG funds were in the top half of performance, 44% in the top quartile, 24 out of 26 ESG index funds beat their benchmarks. Probably the world's largest private sector asset manager, BlackRock, said that 90% of the ESG products outperformed their non-ESG products. So strong performance has clearly attracted significant inflows as well. So in the United States, ESG equity funds saw $200 billion of inflows cumulatively since 2019. Meanwhile, non-ESG funds suffered $600 billion of outflows. And ESG is currently the only area of active management that is growing, and it is the fastest area of growth in passive management as well. So why has Goldman Sachs as a firm been focused on ESG research for the past 13 years? It's very simple. we found that our clients, of course, there's a huge spectrum from hedge funds for more short-term to pensions and endowments and sovereign wealth on the other end of the spectrum. More of the people in the latter group were coming to us and saying, you guys write research and recommendations for the short-term crowd. What about longer term? We want to pick long-term winners, and we can't churn our portfolios in the way that hedge funds, for example, might typically be doing so. And in doing so, we figured out, or we discovered that in addition to the standard conventional financial metrics of measuring a company's comparative advantage, there were also many non-financial metrics or intangible metrics that were actually equally important. So in what we call our GS Sustain analytical framework, we combine the two things. We combine financial metrics of returns, of competitiveness, of positioning, with non-financial metrics that are obviously related to ESG scoring. And we have found that over time, in the beginning, I think people were very skeptical. They said there's no linkage between ESG metrics and performance, which is true. But when you tie them together with financial performance metrics, we found a very powerful combination that could enhance value for end investors.
Thank you. Very interesting. And then, Tashiro-san, I feel there is still the big skepticism about ESG in Japan. But now the Daiwa Securities strongly supports ESG investing, my understanding. So could you share some of the history of a story about the transition of discussions in your company?
Okay, so as I mentioned previously, one of the reasons why Japan has been lagging the rest of the world in ESG investments is because it's sort of like was dumped on them. Rather than coming from the inside domestically, as with a lot of other issues, when Japan changes, we use the word gaiatsu. It was dumped on them. So that's changing for reasons that I just mentioned. But there are also some other characteristics of Japan that's making it a bit more difficult to move as quickly as in some other countries, like Kathy mentioned. And actually, just to, you mentioned COVID. COVID has actually helped accelerate ESG investments for all the reasons that Kathy's mentioned. And especially one of the missing points in Japan is the individual person on the street, like Mrs. Watanabe. I remember when Greta went on boycott for green environment, Japan was one of the very few countries where school kids actually didn't boycott, which, and for reasons like they're not activists, their parents didn't want them. And so that's where we started out, and that's all changed because of SNS and the younger generation being more conscious about the world around them. And I think COVID has helped that acceleration. There's another part, which is education, and Japanese people don't like to talk about money. Education for financial literacy is not where I think it needs a bit more improvement. I talked about SGDs. SGDs is a new topic that will be that have been started talking at school. So kids would get educated on SGDs, which is a broader version of ESG. And I think that will help younger kids look at products or services or companies around them and what's happening and point, so what's going on. And I think that will accelerate. Number 3, which is where Daiwa Securities comes in, is that Japanese individuals have a style of cash at the banks. Over 50% of the money is in bank deposits. And we know, and the government knows, that because of zero interest rates, that money isn't growing, and that money isn't covering for people to live over 100 years old. And I think that's where our company can play a role in providing products that individuals find attractive and interesting, which is very transparent, and which might help a sustainable world. And so we are very keen to find products that people would be interested and easy to understand, so that we can do both at the same time. We could get investments, their money working, as well as provide money for ESG. And what we've tried to be doing that for quite a long time. We introduced the first vaccine bond in 2008. We've been selling to retail of the ESG bonds. About 50% of what was sold into retail was lead managed by Daiwa. But we still need more issuers, and that's where our wholesale company comes into play, is that we are talking to companies about disclosure because they're not standard. And I think while more and more companies feel more confident and comfortable about issuing ESG bonds, we will see more issuance. And I think that's a big role that we can play.
Okay, so the Murakami-san, and also you already described some just how to support to investing funds OECD, but do you have some difference between the worldwide trends and the Japanese trend?
Well, the difference between other countries versus Japan, I mean, one of them I think is the fact that the Japanese, just in general, the awareness of the Japanese large population is still relatively low. But I do think, as Tashiro-san said, there is a lot of really interesting upside there, because I do think if you look at the way the Japanese society is run, or how we sort of behave, there are inherent ESG elements that I see everywhere. I mean, Japanese people are very good at recycling, for example. I mean, you just don't see that in the U.S. So they are very, very good about recycling. They PET bottles, after they use them, they wash them, they take off they peel off the labels, and things like that. These little things just tell me that inherent nature of the Japanese community is actually very, very ESG friendly. So how do we make sure that there is a connectivity of what we are doing naturally and what we can do in the form of investment, for example? And that's exactly what you said, Tashiro-san, in terms of having a better sort of financial education, so that people can connect what they have been maybe doing for some time in their normal lives to maybe in the form of investments. And I do think that connectivity can be a very big change maker in terms of how Japan can potentially catch up with the rest of the world. And I do think there is actually a huge potential for Japan to be one of the major players to move forward with the ESG movement.
Thank you. And this is a FinTech topics, so FinTech symposium. So we want to also talk about the relationship between the ESG investing and also FinTechs. So then the Murakami-san again. So some argues that innovation is dispensable to achieve the SDGs, and various sources and connections on technology and the SDGs in ESG investing. How does the OECD support this disruptive innovation?
So we have actually a special task force to look at the role of technology in combining that with the promotion of ESG investments. There are, for example, you can just see so many startups are coming up with very innovative solutions, innovative products, and innovative services using digital technology to enhance, for example, the monitoring aspects of production, manufacturing companies, for example. So these are just a few examples of how digital technology can be adopted, can be used to, in this case, the monitoring service, or monitoring technologies in terms of looking at the supply chain. And these are, quite frankly, still at the early stage of development, but we see a number of companies doing something like that. So I do think when you start using digital technologies, not only just monitoring activities, but also many other elements in the financial industry, I do think, we were talking about how difficult it is sometimes to look at all these different elements, and simplifying these elements, data points is going to be the key. Digital technologies actually can help to do that. And again, we are still kind of early in terms of seeing a number of actual products out there. There are a few out there already, but I do think in the next literally year or two, we are going to see a very, very user-friendly, digital technology-driven services that can be adopted by maybe Daiwa or Goldman Sachs, I don't know, so that people can actually use ESG data in a much more user-friendly way, in much simpler way, so that they can make right decisions. So these are just giving examples, some of the things that we are discussing at, in this committee.
Thank you. So Matsui-san, and also asked about the relation technology and investing, and so you already mentioned the data-related challenges. How to overcome it?
So data gaps remain a huge challenge, and if you actually think about the wealth of information related to ESG out there, according to my colleagues, 43% of all general ESG metrics currently have disclosure rates less than 20%. So while there's a lot of data out there, in terms of the data that is meaningful and material, we still don't have enough disclosure, point number one. Point number two, when we started our GS Sustain research, I can tell you it was super manual. We had our analysts ringing up companies, even in Japan, one by one, asking them, what about your injury rate? What about things related to your supply chain? It was very hard to get this information from companies. Yes, data provision has definitely improved, and I think there are some fintech-related companies like True Value or SenseFolio and in the United States, and Miotech, I think is the name of the firm in China. But frankly speaking, if you ask my colleagues about the quality of these, fintech, sort of data, I don't know what you call it, data scrapers, or the ones that just amalgamate and collect all the data. Even if you use these fintech providers, we still have to manually check the quality, which sort of tells you that the quality is not quite where it needs to be yet, although it's great to see these new players, but we're still far from an ideal situation. But we hope moving in the right direction.
All right, then Tashiro-san, and also how do you feel what are the expectations of fintech companies to help you advance ESG investing?
So I think there's two aspects. One is, like both Murakami-san and Kathy mentioned, is that because of the data, for pricing or for rating will be more accurate, and I think investors will be more confident that their money is actually being used for a good cause because of all the data, and the rating is more accurate than it is right now. Because for one of the reasons why Japanese investors say they're a bit hesitant is that the rating agencies are all over the place, like Murakami-san's graphs mentioned, and they're not sure what they want to do. So that hopefully with data will be remediated. And another thing is that with fintech, investments will be made into smaller units, meaning that even retail or smaller investors can invest in a product. So they can invest in one unit, which financially would be impossible if right now. But with fintech, if that's made possible, a lot more people can participate in ESG investments. And I think that's what's needed in the long term for sustainable finance. And hopefully, and there are some fintech companies that are working on it already, and I find that very promising.
All right, great. So then the very last question to Matsui-san. So now that we had the big news about the carbon neutral in Japan, do you have any opinions or do you have expectations to issue a company for this the roadmaps to carbon neutral?
Well, first off, kudos to the Japanese government for announcing this very bold target. My understanding is there wasn't a 100% consensus in Japanese society before this announcement was made, but I think Japan is really, if you actually look at ESG scores and disclosure of those scores, S and G are, typically Japan has been lower on the ranks, but E has been relatively high. And so I think if Japan can actually play an important leadership role in, guiding not just government, but also companies in the private sector towards carbon neutrality by 2050, I think that would be incredibly useful. And so I'm very excited by that challenge.
Thank you so much. And we already spent the 45 minutes to talk. So thank you very much. And also thank you very much to the audience. Thank you very much to the staff to holding this event. And the next event should be the COVID-19 pandemic accelerates a paradigm shift in Japanese financial industry. We'll start soon. Thank you very much.